Well, hello, traders and investors. Today is officially the first day of the second week of October. Today's Thursday. We've got jobless data coming out. Let me show you what the expectations are. This is coming out in about 11 minutes or so. I think we'll be able to get a chance to see what the actual number is before we're done with the report. But again, I wanted to show you what the consensus is. Now, the key is that we're moving below the 4-week moving average consistently. That's the key. But we were like at 1 million 5 months ago, and now we're only at 800,000. That's bad. It's telling us that we're moving in the right direction, but much, much slower than expected. And California is now offline when it comes to claim data as it scrambles to limit unemployment fraud. So we're kind of looking at everything with one arm because, California is a big state. Weekly estimates for the U.S. largest state now frozen at a prior level of more than 260,000. Forecasters see total initial claim easing slightly, but not substantially to 819,000, the consensus. This would compare to 837,000. I would love to see this number below 800,000. It would be really good to see it below 800,000. We'll come back to it in about 10 minutes or so. Let's talk about global economy, and we'll go from there. By the way, I was just looking at this latest British study. 86% of infected people show no symptoms. Can you imagine that? It's like almost nobody, almost everybody's got it, and nobody's feeling it. It's really strange. So again, and I got to say, the fact that Donald Trump our president bounced so fast from the hospital, that's very promising. I mean, I know this cocktail is expensive, but man, oh man, did you see this guy? It's like somebody pushed him and there was springs. He just bounced right back. It was 72 hours and he's back in the office. I got to say, for a 7-year-old, he's pretty springy. My dad's 72. I don't know. I mean, honestly, I just don't know where Donald gets this energy. So my hat's off to him. I hope I have that energy level when I'm 74 years old. But I still got 24 years to go, or 24 years and a few weeks to go. Anyway, let's get into the global markets. And I got 2 really hot stocks for you right now. Low risk, inside day highs, stocks that have been outperforming the market. But first, let's talk about global economy. So global stocks, mostly higher on Thursday. And actually, the S&P 500 finally caught up to the NASDAQ. The NASDAQ's been leading for the last few days, but it looks like the S&P starting to come back in line. I'll talk about that in a minute too. Optimism that U.S. stimulus may be coming after all, as President Trump appeared to reverse his earlier position to halt talks on another economic rescue effort. Meanwhile, the latest data on U.S. jobless claims, that's what I was just talking about, expected to show a still high level of layoffs. That underscores the weak state of the economy that has recovered only slightly more than 22 million jobs that were lost in the pandemic. And that's what I'm saying. This happened in February. We're already in October, well into October, and the jobless levels, they're moving lower. The jobless claims are moving in the right direction, but way, way slow, like too slow. Analysts say U.S. elections is the one global event market players view as influencing critical policy. It's the biggest one. In the meantime, there's a consensus among many economists and investors that the economy needs another dose of support following the expiration of weekly jobless benefits and other stimulus Congress approved earlier this year. There's no doubt about that. And so the market's attention remains fixed on the prospects of more stimulus for the economy. That's really the only thing that matters right now. Germany seeing a sharp jump in new COVID-19 infections, which is terrible, raising fears that the pandemic is gaining in a country that so far coped better than many of the European neighbors. That's the biggest fear right now because winter months are here. And from what I'm understanding, I'm talking to my friends in Canada and up north, Philadelphia. They're telling me it's already getting really cold there. It looks like we're going to have a really early winter and a really nasty winter. And winters and flus and COVID-19s, they don't mix very well. British government is mulling fresh restrictions on everyday life in England amid mounting evidence that the measures so far have done little to keep a lid on the new COVID infections. France set a new record of infections on Wednesday. So remember, we had China, then Europe, and then America. What happens if we have to start closing things in America again, especially in light of the elections? That is not going to bode well. Energy, again, we're still below that $41, $42 a barrel per barrel price that frackers in the U.S. pay, that is very, very negative for the energy markets. As a matter of fact, let me show you the energy market. I mean, this thing is bad. And I told you guys, don't bottom pick. You're going to get hurt. You are going to get hurt. Look at this. This is the all-time February low, okay, right here. It was at $22. We went as low as $28, and we went from $22 all the way to $46. We doubled in price, then went from 46 and dropped half of that. And if this price decline continues to occur, there's a good chance we may go lower and test these lows. As a matter of fact, I'm waiting for the weak stocks to test the lows. The weak stocks, not the strong stocks. The weak stocks to test the lows. And that's going to give me a good indication that we're at a double bottom. And that's going to give me a good indication that we're actually going to go higher. Because most investors believe, there was a survey, and most investors believe this market is going to double bottom. And it doesn't have to double bottom exactly, but the odds are it'll hit a low, not just this sector, but all the stocks and sectors that are being washed out right now. We'll hit a low, we'll go lower by a few ticks, hit a bunch of stops, and then start heading higher. About 20 years ago, 30 years ago, before algorithms, the second bottom used to be higher. But now the second bottom is lower because we've been hitting the stops. The algorithmic traders, which account for about 80% of Wall Street, they've been hitting the stops and then driving the market higher, which is why I've been using stops less and less and less and less. I still use them, but I use them less, and I never, ever use them with options. Now, if you look at the S&P 500 right now, you will see, let me go to a closer view, you will see that we are officially, as of right now, one complete day of clearance above the 50-day moving average. I'm going to make an assumption that we're going to go higher today instead of lower, although we don't have jobless claims. They're going to come out in a few minutes. But as of right now, we look like we're going to open up about $1.58 higher, which is right here. So we're moving away from the 50-day moving average. So today, if we don't touch the 337.16 level, we're at 342 right now. I'm talking all the way 337 going from here to here. That's going to be very, very positive. And I don't care if we're going to close lower or higher. All I care about is having 2 complete days of clearance above the 50-day moving average. Now, if you look at the Russell 2000, which has been lagging behind for over a year, look at the 50-day moving average and look at where we're at right now. We made a multi-month high right here. Let me just clear these studies here, these tools, and put on the 50-day moving average so you could see exactly what I'm talking about. There we go. Look at the 50-day moving average. We crossed the 50-day moving average. We've been already above the moving average 4 days in a row. Looks like we're going to open up about 132. And look where we closed yesterday, 218. Look where the SPY closed yesterday, 174. Although right now the SPY's up 188 and the Russell is up. So it may be changing, but as of right now, that Russell is leading by a good shot. Look at this. All the overhead resistance has been covered. If you go back, we are at the highest level we've been since, look at that, since February 25th, okay? The U.S. stock market, the SPY, is trying to go to the highest level it's been since December 2nd, okay? December 2nd is when we made an all-time high. So if you look at the previous high, we're like all the way down here. But if you look at the Russell, we are doing substantially better. We're making clearances. And that's because, don't hate the messenger. I'm just being honest with you. The Russell is favoring Biden. The S&P's favoring Trump. Why is the Russell favoring Biden? Because Trump is really big on this trade war. This trade war has been a wet blanket for the Russell. Look at when the Russell made an all-time high, and look at when Trump made a big deal about this trade war. Look at this. Lower highs. S&P, oops, excuse me, getting carried away here. Higher highs, except now. And if you look at the QQQ, and all of the QQQ pretty much is in the S&P 500, same thing. Made an all-time high, the second day above the moving average. Same situation. It's literally doing exactly the same as the S&P. So I want to see a clearance above the 2 76 level. I don't want it to touch this bar, this 50-day line. If it has a clearance today, and hopefully it'll just stick around this area and go higher, hopefully. Jobless claims comes out in a minute. Then we'll have 2 days of clearance, and I'll feel a lot more bullish about going long. But as of right now, I am really liking the Russell because the Russell is showing a lot more strength than the rest. A lot more strength. And most importantly, it's the first time we're seeing this in a long, long time. Now, I want to show you 2 inside days. Inside days are stocks that are making all-time highs but are consolidating near the high end. In other words, it makes an all-time high and then has 2 days that are within the inside range of this day. In other words, it doesn't hit the high and it doesn't hit the low. They're inside, which gives options a time to cool off. So this is Bmc Stock Holdings. What did they do, you may ask? Let me show you. Building materials. You guys know how I've been all over building materials. Building. Residential housing market. Guess what's hot right now? Residential housing market. If you look at my filters and if you look at the stocks making all-time highs, let's see here. And folks, everything I'm showing you right now, I've been talking about for a long time. Whirlpool, residential. United Rental, residential. Lennar Home, biggest home builder in the country. Pulte Group, biggest home group, one of the biggest builders. DHI Horton, one of the biggest builders. That's in the top like 2% of the S&P. BMCH, building materials. Look at this. 5-year revenue 179%, 5 years earnings 300%, 1 year return 73%. That's really, really good. Now, I would be buying this stock when it goes on a buy stop. On a buy stop, I would buy it right at the 44.90 level. Yeah, 45. Let's just say 45. And I would liquidate it if it goes to the 42.50 level. Really low risk. That's what I like about these inside day highs. They give you 2 days of inside day to lower the volatility so that you don't have to buy on a breakout. Or buy while it's breaking out. So I buy at 45 on a stop, liquidate it at 42.50, 42.40. Just to be on the safe side, 42.30, 42.40. That's my first stock. I got another inside day stock. The second inside day, Domino's. Now, you may or may not know this, but Domino's is one of the fastest gaining stocks in history. It looks like it had some earnings here, but it's at an all-time high right now, believe it or not. Now, it's down $20, so it looks like it had earnings. So what I would do is I would wait. I wouldn't do anything. I would wait for the stock to go above the 440 level. Buy it at the 440 level and put a liquidation stop right at the 423 level. This is a volatile stock, and it's a big stock, but it's a $440 stock. So $20 is like 5%. It's not really a big deal. Adjust it with share size. Don't say it's too big. Just adjust your share size. Smaller shares, if you have 100 shares versus 1,000, $20 risk is not that much. So I would like to buy it right here at the high, right at the 440 level. Wait for it to go there. It's only trading at 411 right now. It's hitting low right now. Wait till it goes to the 440 level, buy there, and put a liquidation stop at the 423 level. And if the volatility is too high right now, and I get it because of earnings, I would just wait. I wouldn't be buying it today. I'm just saying this is a good opportunity right now as an inside day. But it already broke out, and it's making all-time highs. Interestingly, it went all the way up. Now it's went all the way down to 410, and it looks like it's going to come back up. But these are my 2 stocks that I like. I like BMCH now, and with Domino's, I would wait a little bit. I would wait for it to have a few more inside days, and then I would go long above the 440 level. Domino's, again, let me show you something on Domino's. Look at the 5-year return, 305%, revenue 81, earnings 230, dividend 160. Stay at home, what do people do? They order pizza, of course. Now, it's already 8:33. Let's look at jobless data. Drum roll. Let's see what the numbers are. Are they going to be below 800? Ooh, that's bad. That's not good at all. Nope, not below 800. Right in the middle of the range, higher than the consensus. Let's look at the S&P. It's still holding on. Let's look at the bond market real quick. Yeah, it's going to open a little higher. All right. Again, I guess it's not that big of an impact, but again, 840. We're not doing that great, folks. This is a good argument for the aid, for the jobless, for the claim, for the money that Trump wants to throw into the economy. The fact that jobless claims are moving lower really, really slow. Again, they're moving in line. We're below the moving average, but look at the consensus. 819,000, 840. That's bad. That's bad. So again, be very, very careful. We're moving in the right direction, a little slower than expected, but we're moving in the right direction. Keep your eye on the SPY to make sure we have clearance today. We want to make sure we have full clearance, all right, above the 50-day moving average. The moving average is right at the 337.18 level, and the QQQ, same thing. The moving average is at 276.41 level. If we are above that today, that's a bullish sign. And again, hopefully Trump will come to his senses, give the country the aid that it needs, give the country the support that it needs, and cause the market to make new highs again. Now, before you go, I've got something important for you today. There's been a major flash crash in September. We saw it. It's not surprising that most traders are hurting after losing money and are trying to find a solution. Luckily, I've seen the market activity before many, many times and know exactly how to take advantage of these crazy market levels. Folks, trust Uncle Roger. I've done there before, been there before, done there. Been there and done it. If I can only learn how to speak in the morning, that would be good, right? And finally, I'm revealing how these flash crashes offer traders the biggest opportunities. That's right. Flash crash, fast cash. Flash crash, fast cash. If you need help navigating and trading this volatile market, I urge you to click on the link below. You got to check this out. I'm going to show you how you can earn 92.5% in your account in less than a month consistently with programs that continue to make all-time highs. You guys are going to love this. Take advantage of crazy markets, take advantage of flash crashes, big opportunities for consistent profit, and most importantly, you get to spend more time with me. Follow the link below. And I hope you're getting something out of these videos. If you are, post a comment. Send me an email at support@marketgeeks.com. I'd love to hear from you. I'll talk to you guys later. Have a fantastic day. Bye.